How can one identify the best key levels to trade off from? This is a question every single trader should be asking. And if you are not asking yourself that, then you should be. Because by identifying the key levels in the market, you will know where all the orders are, and that allows you to get in with a small stop loss. Just imagine predicting that this is a key level and getting into the level with a small stop loss of 20 pips. That's the power of being able to identify key levels. So in today's video, I'm going to show you 3 price action structures that you need to identify and how you can place your key levels at the optimal levels so that you get the highest probability trade and the best possible reward to risk trades. Sounds good? Then make sure to watch this video till the end, because by the end of this video, you will have a good idea about where the key levels are and potentially improve your win rate. I will also show you some of the most common mistakes that beginners make, which will save you a ton of money, especially in the third price action structure. Before I jump straight into the first price action structure, please hit that thumbs up button and subscribe to the channel and turn on the notification bell. It helps support this channel so that we can keep serving you with valuable trading videos like this. We also do a giveaway for our plug and play package worth $37 for every new video that we release. So if you wish to participate in a giveaway, look for an emoji somewhere in this video and comment on what the emoji is. You can also find the full instructions in the pinned comments down below. So let's move on to the first price action structure, which is the trending structure. This is the kind of price action structure that beginners must know and should focus on. If you are not yet profitable as a trader, then pay close attention and keep watching, because this is the price action structure that will give you the highest probability of succeeding as a trader. The trend structure is made out of 4 points, and you have to see all 4 points for this structure to be valid. Now, if you do not see all 4 points, then the structure is not valid and the key levels provided by the structure will not be reliable. This is a very common mistake that rookie traders make, so please only draw the key levels after all 4 points have been established. Now, in the bullish trend structure, you should see a low, a high, a higher low, and finally a higher high. And in a bearish trend structure, you should see a high, a lower high, and lastly a lower low. If you study Elliott wave or any other form of wave counting, it is otherwise known as A, B, C, D. I won't go into the details of that here because that's not the aim of this video. Now, once all 4 points are identified, then we can easily identify the key levels. The first key level you want to focus on in a trend structure is the recent swing high or low, which is denoted by point B. Here's a bullish example and here's a bearish example. Nothing too complicated because it is just a pullback to the previous swing point. But here's the common mistake that most traders make. Most traders assume that the previous swing point is the only key level, and if the price breaks the level, then the trend is no longer valid and they abandon their trading bias. Now, this is not correct because price has not violated the overall market structure, meaning to say that price hasn't made a higher high in this case, or in the case of a bullish trend, a lower low. So many rookie traders miss out on the second key level, which is the prior swing point C. This swing point C can also be viewed as a make or break level. If price breaks the level, then the trend structure is no longer intact and it transitions to the reversal structure, which is the second type of price action structure which I will cover shortly, so keep watching. Here's another example of the key levels in a trending structure. We can see that the structure has all 4 points and qualifies as a trending structure. So in this case, the key levels will be at the swing high over here and the intermediate swing low C. So basically, you want to map out the points B and C as the 2 key price levels to focus on. Now this second price action structure is the reversal structure. If price breaks point B, then we have a reversal structure. Think of it like a double top or bottom pattern. Now there are 2 critical price levels for you to pay attention to when you see a reversal structure such as this. The first is the extreme swing high or low. This is the level at which price failed to break through, and obviously this is a critical level. The next key level to note is similar to the trending structure, and that is point B. Think of it as the neckline of the double top or double bottom pattern. Here's an example of what I mean. Over here, we see that price has bottomed and price fails to break the support. Price eventually breaks the point B, and the 2 key levels that you need to focus on will be the swing low here and a neckline over here. Now again, don't make the mistake of focusing on one key level while ignoring the other. Just because price breaks the first key level over here does not necessarily mean that the market is immediately bearish and ready to break past the second key level. You have to consider both key levels and watch for a reaction. So let's move on to the last type of price action structure, which is the ranging structure. This is the type of price action structure that I advise beginners not to trade, especially if you are still struggling to profit in your trading account. Now, you might ask, why bother to cover this if it's something that I recommend against? Well, that's because you need to know how it looks like so you can avoid trading it, right? How can you avoid something if you don't know what to watch out for? So well, that's the purpose of this portion of the video, and it's important that you keep watching. Anyway, I digress, so back to the ranging structure. A ranging structure occurs when you see price bouncing between 2 levels. Sometimes the levels are not clear and price does a fake out of the key level, which might look something like this. Other times, you can see clear price levels. So this is why I strongly recommend against trading in this kind of price action structure. The level may or may not be clear, and traders who lack the experience may end up picking the wrong level. For this reason, if you want to identify the key levels in this ranging price action structure, the safest approach is just to take the extremes. This is very important, and I will repeat myself. In a ranging price action structure, always take the extremes. This way, you will know for a fact that anything above or below the level means a breakout. You will not be stuck wondering if there's a higher or lower level that may prevent price from moving further. This is a very common mistake that rookie traders make. So they see a price chart like this, and because they want to trade against my advice, they use a level like this to trade. And price takes them out, so they reverse their positions thinking that price has broken out of resistance. So they enter a long trade, and well, what happens? Price hits the higher resistance and then bounces back down. So the rookie trader is left dumbfounded because the market has just whipped him, and anything that he does seems to be wrong. He loses money when he buys and he loses money when he sells. Unfortunately, this is a very common situation. So please rewatch this portion if you must, because it will save you a lot of money. This is why I advise against trading in a ranging price action structure. There are plenty of easy money to be made by following the trend. Why make it tough for yourself? Here's a quick overview of the 3 types of price action market structure and the structure's key level. We have the trending structure, the reversal structure, and the ranging structure. Remember that both the trending and reversal structures have 2 key price levels to focus on, and to always take the extremes as key levels in a ranging structure. And that's it for this video. I hope this video has been beneficial. Do drop a like and subscribe to the channel. If you like more videos like this, I recommend that you check out some of my best uploads in the end screen over here. Thanks for watching.